The Colombo Stock Exchange, where does it stand currently? Is it suitable for you to invest your money at the CSE? To discuss all this and more, we have with us the Managing Director of JB Securities, Mr. Murtada Jafarji. A very good evening and welcome to this First in Focus.
Thank you for getting me on your program.
It's a pleasure indeed. Starting off, Mr. Jafarji, tell me, where does the Colombo Stock Exchange currently stand in your opinion?
Well, in terms of the integrity of the system itself, that there has been a significant setback, there is no doubt about it. And I think the regulator and the Colombo Stock Exchange is well aware of that, and they're going to work towards fixing the problem in terms of having a superior risk mitigation system to prevent this kind of thing happening. If you ask me the question in terms of from an investor perspective, I think perhaps it is standing in a better state than ever before, because there has been a significant decline in share prices and it is far more attractive for the long-term equity investor.
Mr. Jafarji, a few months ago, that's in February, you were quite pessimistic about the Colombo stock market itself. However, now you're saying that it is the time that people should invest in the stock market. So now you're being very optimistic about the CSE. At a time, people are having negative thoughts of the CSE itself. Tell me, what is the reason behind this?
So my negativity was actually in February 2011. That was about the time when the markets were peaking. Now, fundamentally, markets are driven by people and emotions do come in. So 15 months ago, I felt that there was an element of irrational exuberance, that there was excess optimism, and the prices indicated outcomes that were very unlikely, because finally they are a reflection of the future earnings powers of companies. Now that prices have come down significantly, which are not necessarily indicated by the index, because the index to some extent is distorted by the larger weighted market cap companies. A lot of companies have come down by 60, 70, even sometimes 80% from their peak prices. So there is far more attractive valuations on offer, and that is why to some extent I am more optimistic of equity investing.
Taking a look at the Colombo stock market itself, we saw the manner in which the CSE has stumbled continuously over the last couple of months or so. Tell me, what is the reason behind this, Mr. Jafarji?
Like the laws of physics, the laws of economics are immutable, and the key driver of equity prices are interest rates. Simply that the most basic form of interest rates is what is called the risk-free rate, and any other form of investment has to have a premium above that, because the uncertainty between the expected return and the actual return becomes greater. So when interest rates, which have been going up recently, it is signaling that future earnings, future growth in the economy is going to be slower than initially expected. So there are two things that drive share prices up. Either it is the expectations of future increases in earnings, or it is an adjustment for those future earnings by a significant risk factor. So in this case, since interest rates have gone up, that is driving the cost of equity up, and therefore prices are coming down, which is the correct action of the market. Now, day to day, there may be different random events and things that happen in the market that are ascertained to be the cause, but that is all market noise. That is not the true cause. The main reason is that the interest rates are going up, the expectations for future economic growth are coming down, and the discount factor in valuing securities is going up. That is the reason why share prices are coming down.
When you take a look at the interest rates itself, what is the role of the central bank to maintain the CSE in a very stable position at this point of time?
So when you say the central bank, my understanding is that they have two roles. One is in the primary role in determining monetary policy. Now when they adjust interest rates, it affects the whole economy. So it affects the share market in two ways. One is that it affects the future growth of the economy, which also affects the future earnings growth of companies. And second is that it increases the cost of capital. So that has a bearing on share prices. A more secondary thing is one of the agency functions of the central bank is the EPF, and they are a significant investor in the equity market. So that is how I see their involvement in the market.
We'll take a look at the CSE itself, Mr. Jafarji. Many say that there was a bubble created. There is overvaluing of shares of the last few years or so. Wasn't the SEC, the Securities and Exchange Commission, supposed to pitch in and look into this system which is taking place at the CSE itself? They are the governing authority. How do you view the role of the SEC at this point of time?
So SEC is the market regulator, and their main focus is to ensure that an orderly market operates. Now bubbles have been forming in the history of human civilization from even 400-500 years ago. There have been many bubbles, and every regulator is challenged to how to prevent the next bubble. But the problem is the previous bubble is not a predictor of how the next bubble is going to form. So invariably bubbles form because of the irrational actions of people, and we are all emotional beings, so we will always be fallen to bubbles, and there's very little that a regulator can do to prevent a bubble from
So you
forming.
mean to say that there was no overvaluing of shares at the CSE over the last couple of years?
There was massive overvaluation, but you cannot fault the SEC to have allowed excessive overvaluation. There are a number of things.
Who should be held responsible for this?
Well, actually, to be quite honest, I can't say anybody is really responsible, that it is really the actions of investors, because they were the ones who bidded up the prices to some extent. One is that it was irrational exuberance on their own part, that their expectations after the war was that, wonderful things were going to happen in Sri Lanka. I think they were little bit getting ahead of the time, that it was not going to immediately happen, because there was a lot of things that we have to first fix in the country to get our productivity up. Then only you can get higher economic growth. So I think the investors were getting a little bit ahead of themselves. And then when a market has a lot of momentum and you had a very loose monetary policy environment where there was a lot of excess liquidity, the combination of these two things led to the bubble.
So you did not answer my question, Mr. Jafarjai. My question to you was very direct. I want to know, there was overvaluation of stocks in the Colombo Stock Exchange, yes or no?
Yes, there was, yes.
Who should be held responsible? Is it the investors itself, according to your knowledge, that should be responsible for this overvaluation of stocks? Or some investors are manipulating the Colombo Stock Exchange? Is this the reason that there was an overvaluation of stocks at the CSE?
So what happened was that initially a loose monetary environment created excess amount of liquidity. That fueled it. But subsequently, in the middle of 2011, there was a lot of what is termed market misconduct going on. Market misconduct. Market misconduct has three elements, and most people confuse it. So the first element is what is called front running, where intermediaries exploit information that certain clients are going to trade and trade before them to take an advantage. The second form of market misconduct is insider trading, where a privileged few who have access to material public information exploit that position. The third thing is what is called market malpractice or market manipulation. Market manipulation is either spreading false rumors to mislead investors, or secondly doing fictitious transactions to mislead investors as to the true volume of transactions. So from these three elements, it was market manipulation that was the most egregious market malpractice that was going on.
So there was market misconduct taking place at the Colombo Stock Exchange over a period of time.
Well, in the second half or the middle of 2011, there was a large instance of that happening.
We're now going for a short commercial break. When we come back, we'll talk about what is insider trading. Can you invest your money at the CSE without any fear? All this and more after this short commercial break.